Hey everybody, today is Friday the 5th of September 2014. Hope it was a good week for you. The equity markets did show a little bit of a mixed performance here, but generally higher for the week as the S&P 500 gained just a small amount, same with the NASDAQ. The Russell was down slightly, still underperforming year to date, but oil, gold both got hit pretty hard, as did bonds. So let's take a look at the charts here and see what we have. The S&P 500 is still clearly in an uptrend. There's no evidence of a market that's declining here, so there's no reason to be involved on the short side. We've got an important level of support just below us at about 199 to 199 and a quarter. So when we look at a 30-minute chart, we of course have that 5-day moving average, and breaking below a 5-day moving average doesn't get us negative. What gets us negative is if the 5-day moving average turns lower, and then we see a pattern of lower highs and lower lows below that declining 5-day moving average. That's not what we have, and that's why we're not bearish on this market. 199 to 199 and a quarter is the important level of support we want to see hold next week. As long as we remain above that level, then this market, we should look at it as digesting these gains more through time than a price pullback so far, as this strong rally has really not corrected much at all, except again through time. So as long as we're above 199, 199 and a quarter, then there's no real reason to be short here. The NASDAQ, same thing here. We've got 99 is really the key level for next week. And as long as we continue to hold above that, we've got zero damage done, obviously, to the longer term uptrend. And the intermediate term uptrend has turned more neutral, turned more sideways, but that doesn't necessarily mean distribution. If it breaks down from here and then shows a pattern of lower highs and lower lows below declining 5-day moving average and prior support at 99 to 99 and a quarter holds as resistance, then we would become bearish. That's not what we have here, so there's no reason to be bearish. The Russell 2000 did break its uptrend line here that's been in place since the low at the end of July, and we did come down and test some support at 115 to 115 and a quarter. As we know, this market has been a severe underperformer this year. It's basically been back and forth all over the place. If we take a look at that volume weighted average price since the beginning of the year, then you'll see that it's down at about 114.20. So right now we've got this 115 to 115 and a quarter. As long as we remain above that level, then we want to give the benefit of the doubt to the buyers. What would be negative for this market is if we do find resistance at this prior little support area at about 116.50, and that's where we have that 5-day moving average, which is flattened out. If we find resistance there and then it starts to break down, do be aware of that, because that may spill into the other markets right now. But so far, as we know, the Russell 2000 has traded much differently than the S&P 500 or the NASDAQ or any other market. So if you're going to trade the Russell based on what the Russell is doing. If you're going to trade the S&P 500, be aware of what the Russell 2000 is doing, but don't say that it has to go down if the Russell 2000 does. That's not the way it works. That's a nice theory, and that makes it sound all good in a textbook, but they don't all trade together. We've got the semiconductors still in a great intermediate term and longer term uptrend. We saw a slight pause a week and a half ago at that rising 10-day moving average. It digested those gains and continued to move higher here after a time correction. As we know, we were looking at this as the important area of support, $50.50 to $50.60. Well, now we have to look at it and say, what's our new important level of support? I think that's probably $51.50. As long as we hold above $51.50 to $51.75 is really our band of support that we want to see hold next week. Then we still give the benefit of the doubt to the buyers. We look at it and say, yes, it's up a lot, it's extended, but being up too much compared to what? There is no reason to be short here. By the way, next Thursday I'll be doing a live webinar at 5:30 Eastern, and that's open to anyone who wants to join, and you can go to alphatrends.net and sign up for that webinar on AlphaTrends. XLF, the financials, these guys continue to perform well also. They broke out past that 23 and a dime level about 2 weeks ago, and we're still holding up above those levels. Longer term, we're still in a strong bull market, and for the financials, we've got a little bit of a band of which should be support. Basically $23.15 to $23.25. As long as we remain above that, this is what should be our near-term support that we measure the success of this market going forward against. If we break down below that, well then of course we'll have a declining 5-day moving average and we'll want to become a lot more defensive. And if that happens, then we'll look for maybe a pullback to test that 23.10 level. Gold, again this week, gold was weak and we're in a downtrend. Longer term, as I've been saying for almost a year, if they don't scare you out on the way down, they'll typically wear you out. We've got a market that's basically, neutral in here, and we're down in towards the midpoint of that neutral range, but there's no reason to be a buyer of gold here. It's just, in my mind, continues to be a complete waste of time. The bonds, the 20-year rather bond ETF, the TLT, did see some pullback this week, and this market's been super strong here, but we gapped down on Tuesday and continued to close weak. We are still above a rising 50-day moving average. We've got this little trend line here that's broken, but we're above a rising 50-day moving average, and we've got this prior band of support this prior band of resistance over here, which is likely to become support. Now, we don't want to buy it as it's pulling back while it's below a declining 5-day moving average. It says stand aside. Bonds have had a spectacular rally, and perhaps it's time for them to digest those gains a little bit. As you know, I had mentioned to subscribers of Alpha Trends that we had gotten stopped out of Apple over here about a week and a half ago. Missed this rally, but we also missed this decline, this weakness in here. So Apple had a great run. It had a big seller in here this week on Wednesday, and it clearly hasn't recovered from that. The stock is below a declining 5-day moving average. There's no advantage to being a buyer in here. It looks like we're likely to see a test of support a test of potential support at that rising 50-day moving average, currently at $96.92. If we see a pull back to that level, it wouldn't be a bad thing. Perhaps a little bit deeper as we come down to the trend line. So perhaps we see it down towards 96 to 96.50, or I'm sorry, 96 to 97 would be a potential band of support for Apple. They've got important news next week. If you're into gambling on the outcome of news, then I'd say load the boat on whichever direction you like. If you're interested in a consistent methodology where you're not gambling but you have the odds in your favor, then I would say avoid Apple for now. The shares of the shares of Twitter, I had mentioned on Yahoo Finance as well as on the blog recently, getting back above that volume weighted average price year to date at $45.51 was the place to purchase that stock. It continues to behave well, making it's still got a rising 5-day moving average, and I think if you're long still from that call, that your stop ought to go under about $49 a share. Zeltiq's been another real nice winner as well. Zeltiq I had mentioned back in here at about the 19 and a half level, and have mentioned raising the stop a number of times in there. I'd say if you're involved down near that 19 and a half level at this point, I would say take at least partial off and maybe set your stop at about 22 and a half. Crocs, of course, continues to be decline here, and there's no reason to be a buyer in that. This was a potential trade candidate. It never got up off its ass, so there's no reason to be a buyer in it. The biotechs this week did see a little bit of a pullback here, and we saw that happen as this biotech group broke important support and made a lower low below a declining 5-day moving average. So there was plenty of time to sidestep it. Now we look at this, and this biotech has had a great rally. What we'll want to see next week is whether or not this prior support up in this 272 to 273 level, 273 to 274, if this does in fact become resistance. Right now, if you're involved in biotechs, hopefully you took some off as it broke support and showed a pattern of the lower low below the declining 5-day moving average. So I would say very cautious on the biotechs at this point from a near-term perspective. There's still a lot of stocks that are very healthy in this market. Microsoft broke back out to the upside here today after consolidating up in this level, and Microsoft continues to show strong performance, as does Nike, which broke out today as well. So Nike here broke some resistance at the $80 level, and you can see it's up at all-time all-time highs here and performing very well. So next week, perhaps Johnson & Johnson is a stock that can continue. It broke a little bit of resistance here this afternoon, so maybe a little, a slight pullback down towards 104, then buy some strength would be a way to trade that one. Tesla has been strong. We gapped up earlier in the week, but the volume weighted average price for the week was here at about 281. So sellers are starting to step in to Tesla in the intermediate term. We're still in a very strong long-term uptrend, so I wouldn't read into that as being negative at all. But there are, we at Alpha Trends, we had some great success with a couple of short sales. One in GasLog, GLOG. We got short that one over in this area here as it started breaking down. We also got short shares of AWAY. This one is breaking down in here, and we got short on Thursday. I think next week you have the potential for continuation to the upside in Navistar as well. Navistar has been really banging away at this 39.25, 39.5 level for the last year, and you can see that this has been an important consolidation with these higher lows. Now, they reported earnings this week, and it initially gapped up and pulled back, but we now have seen that it recovered from that gap up, and I think that next week, if we clear the highs from this week, which were about $40.15, then getting involved there with a stop down at about $39 and $39.15, that Navistar looks like a good one. So next Thursday, again, there will be a live webinar. Go to alphatrends.net to sign up for that, and it'll be an opportunity to review the market, review some stocks, have some questions answered, and take a look at some of the stocks that you guys are interested in looking in.